Happy Monday, everybody. Today is June 8th, 2026, and this is your Monday market update. Now, after 9 consecutive weeks of gains, markets finally took a breather last week. Investors spent much of the week balancing strong economic data, rising oil prices, renewed geopolitical tensions in the Middle East, and growing questions about whether some artificial intelligence stocks have simply moved too far too fast. While the headlines focused on a sharp technology sell-off late in the week, the broader story was actually one of rotation. Healthcare, financials, consumer staples, and industrials, they generally held up well, while many of the market's biggest AI winners came under pressure. It was a reminder that markets can change leadership without necessarily changing direction. Monday began with investors returning from the weekend focused on two major themes: escalating tensions involving Iran and continued excitement surrounding artificial intelligence. Sounds familiar. Iranian state media reported that negotiations with the United States had stalled and that Tehran could potentially move to keep the Straits of Hormuz closed following Israeli military activity in Lebanon. Oil prices surged nearly 6%. Investors worried about potential disruptions to global energy supplies continuing. Despite those concerns, technology stocks powered markets higher. Nvidia stole the spotlight after CEO Jensen Huang unveiled a new processor for personal computing during his keynote address at Computex in Taiwan. Wang described the development as a transformational step for computing, and investors responded enthusiastically. Nvidia surged more than 6%, while Dell and HP both posted double-digit gains as excitement spread throughout the AI ecosystem. Stronger than expected ISM manufacturing data reinforced the view that the economy remains resilient despite higher interest rates and geopolitical uncertainty. By the closing bell, all three major indices had reached new record highs. The Dow finished up approximately 1/4%, S&P rose approximately 1/4%, and the Nasdaq gained approximately 0.5%. Tuesday brought another record-setting session as enthusiasm surrounding artificial intelligence continued to build. Investors focused on comments from Nvidia's Jensen Huang again, who suggested that Marvell Technology could become the next trillion-dollar company. Marvell shares surged just on that, while semiconductor stocks broadly moved higher. Hewlett-Packard Enterprises also delivered strong earnings and raised guidance, citing continued demand for AI infrastructure and data center expansion. At the same time, investors digested reports that Google planned to significantly expand spending on artificial intelligence infrastructure. The market initially welcomed that announcement as another signal of robust AI demand, although some analysts began raising questions about the sheer amount of capital required to sustain the industry's growth. Geopolitical headlines also improved modestly as Secretary of State Marco Rubio suggested negotiations with Iran were continuing. The Dow gained approximately 0.5%, S&P rose approximately 1/4%, and the Nasdaq finished essentially flat for the day. Wednesday market marked the first meaningful setback after the market's remarkable run. Stocks opened lower as geopolitical tensions intensified following reports of additional military activity involving the United States and Iran. Oil prices climbed above at $96 a barrel, reigniting inflation concerns and pushing Treasury yields higher. Economic data added to the pressure. ADP employment report came in stronger than expected, while the ISM services report showed continuing expansion in the economy. Normally, that would be welcome news, but investors increasingly view strong economic data as reducing the likelihood of future Federal Reserve rate cuts. The Fed's Beige Book also highlighted persistent inflation pressure and continued economic resilience. Treasury yields rose sharply as markets adjusted expectations for monetary policy. Technology stocks, which had led the market for months, began showing some signs of fatigue. Nvidia, Microsoft, Dell, Oracle, and other AI-related names came under some pressure as investors started questioning whether valuations had become stretched. The Dow fell approximately 1.25%, S&P declined almost 0.75%, and the Nasdaq lost approximately 1%. Thursday delivered one of the most interesting trading sessions of the year. Broadcom reported earnings Wednesday evening, and while results were generally solid, investors were disappointed that management did not raise its long-term AI revenue outlook as aggressively as many had anticipated. Broadcom became the first major AI-related company to deliver results that failed to exceed increasingly lofty expectations. Semiconductor stocks sold off sharply in response, yet while technology struggled, the broader market demonstrated impressive resilience. Investors rotated aggressively into healthcare, financials, industrials, consumer staples, and other sectors that had lagged during the AI rally. United Healthcare, JP Morgan, Costco, Walmart, Eli Lilly, they all helped push markets higher. The Dow Jones Industrial Average was a new record high. There was also some improvement on the geopolitical front. President Trump stated that negotiations aimed at ending the conflict with Iran were progressing, helping reduce anxiety surrounding energy markets. Treasury yields stabilized and buyers stepped in to those non-technology sectors. The Dow surged approximately 1.75%. The S&P gained approximately 0.5%, and the Nasdaq was essentially flat. Friday brought the week's largest move and ultimately defined the market's tone heading into June. The Labor Department reported that non-farm payrolls increased by 172,000 jobs in May, more than double expectations. The unemployment rate remained historically low, and the report reinforced the view that the economy continues to grow despite inflationary pressures and geopolitical uncertainty. Unfortunately for markets, strong employment data also increased concerns that the Federal Reserve may need to keep interest rates elevated for longer than investors had hoped. Treasury yields jumped sharply, with a 10-year Treasury yield moving above 4.5%. Technology stocks experienced a significant sell-off as investors reassessed valuations following Broadcom's earnings report and a stronger than expected job number. Broadcom, AMD, Micron, Intel, Marvell all suffered steep losses, while the semiconductor sector endured its worst day in more than a year. Some analysts suggested that investors may also have been raising cash ahead of several anticipated technology-related public offerings and capital raises expected in coming weeks. The Dow fell approximately 1.25%, S&P declined about 2.75%, and the Nasdaq plunged more than 4% for its worst day since April of 2025. Despite Friday's sell-off, it is important to keep the week in perspective. Markets entered the week after 9 consecutive weeks of gains and with investor sentiment near multi-year highs. Much of the weakness remained concentrated in technology and semiconductor stocks that dramatically outperformed throughout the first 5 months of the year. For the week, the Dow Jones was down about 0.25%, S&P was down about 2.75%, and the Nasdaq dropped about 4.5%. One of the most important developments beneath the surface was the continued broadening of the market leadership. Healthcare, consumer staples, financials, industrials, and energy generally outperformed, while many technology names struggle. That suggests investors may be rotating toward other opportunities rather than abandoning equities altogether. The other major theme remains artificial intelligence, of course. Last week's pullback highlighted a growing debate on Wall Street. AI-related revenue growth remains extraordinary, but much of that growth is currently being funded by massive capital spending from companies such as Microsoft, Google, Amazon, Meta, and Oracle. Investors are beginning to ask when those investments will generate sustainable returns and whether the pace of spending can continue indefinitely. Looking ahead, inflation will be the primary focus this week. Tomorrow, investors will receive the latest trade balance report along with existing home sales data. Wednesday brings consumer price index report, which will most likely be the most important economic release of the week. Markets will be watching closely to determine whether high energy prices are beginning to create additional inflationary pressure. Any surprise in either direction could have a significant impact on expectations for the Federal Reserve policy. Thursday brings the producer price index and weekly jobless claims, both of which will offer additional insight into inflation trends and labor market conditions. Friday concludes with University of Michigan consumer sentiment report and updated consumer inflation expectations. Beyond economic data, investors will also be closely watching Apple's Worldwide Development Conference for any major artificial intelligence announcements. Adobe earnings will provide another important look into enterprise AI adoption and software demand. Markets are also preparing for that anticipated SpaceX IPO, which could be one of the largest public offerings in history. One notable difference this week is that there are no scheduled Federal Reserve speakers. Fed officials have entered their blackout period ahead of next week's Federal Open Market Committee meeting, meaning markets will be focused almost entirely on economic data and corporate developments. As we begin a new week, the market finds itself balancing 3 powerful forces: resilient economic growth, persistent inflation pressures, and extraordinary optimism surrounding artificial intelligence. Last week's pullback served as a reminder that leadership can change quickly, but it also demonstrated that capital continues to move into other sectors rather than simply leaving the market altogether. Have a great week, and we'll see you soon.